Welcome back. You're watching Stockwatch with me, Julieta Televi, and join me to take your stock-related questions this evening. Zwelakhe Mnguni from Benguela Global Fund Managers and Rowan Williams from Nitrogen Fund Managers. If you'd like to send questions, please email stockwatch@bdtv.co.za via SMS on 41392. Rowan, Zwelakhe, good evening to you both. Zwelakhe, if I may start with you, I haven't chatted to you for a while. It was a great day if you were long gold shares and PGM stocks and also multi-choice. What's the motivation behind the surge that you've seen in the gold and the PGM miners? Gold, I understand the price is rallying, but what's behind that drive at the moment? Oh, Zwelakhe, you're on mute. Sorry.
Can you hear me now?
Yeah. You think you'd have your Zoom etiquette up and running after, what, 4 years?
Yeah. Look, I think the big thing behind gold is the fact that we are seeing geopolitical tensions rising in the Middle East and in Europe. I mean, there is potential for NATO to get involved in Ukraine. I mean, there's been threats like that. That is not great for the rest of the market, but great for gold. I think the Middle East situation is also quite volatile. So that is a factor. I think on the other side, I mean, on the PGMs, I think we are seeing that the US economy is strong. Maybe numbers are not as bad as the people had expected. That we were expecting a slowdown in hiring and those type of things. China is looking a lot better than what it was a few months ago. So I think those are the main things that are supporting commodities at the moment.
Okay. I mean, Rowan, a viewer actually just talking about gold, and it's a correction. He says, it amuses me when I hear on your show that gold is at an all-time high. Gold is, of course, only at a nominal high. If you factor in inflation, then gold is not at an all-time high. That being said, if your panel were forced to pick a gold miner, local or international, what would be the pick? Are you tempted into gold shares, or do you feel that you may have missed the bus? Because this bus, when it goes quickly, and then it can come to a screeching halt as well.
Yeah, it has been interesting how the longevity of gold, and it remains an investment theme. Investors like it because it is a hedge against both inflation and I guess geopolitical risk, as Zwelakhe pointed out. So, there was talk that it was going to be replaced by cryptos, but it seems that there's a fair cohort of investors that still rely on gold as a core part of their portfolio. So from our perspective, we don't see it as a sort of industrial asset and have a particular use. It's sort of a store of value. But it has been actually a good store of value, particularly if you're a rand-based investor. So it's doing quite well. So we don't own gold shares, but if we had to own one, it would likely be Harmony. They are executing very well at the moment, so they've got their costs under control. Their assets are performing well, and they're generating a lot of cash flows. Their cost curves are good. So even if the gold price were to come down, say geopolitical tensions were to be resolved, and the price came down, they would still be very profitable and cash flow positive. So that would be our choice.
Okay. And I suppose they've got, maybe you have the hedge of the copper assets that they're developing, which is alongside in the Wafi Goldpur assets that they have. So we're like, to viewers' question, would you pick a gold share now? Would it be a local gold stock or an international one? You don't have to just go for South African miners. You could go for a Barrick or a Newmont if you wanted.
I'd probably go with Goldfields. I think their assets are relatively better in terms of cost of production. I know Rowan was talking about Harmony. Unfortunately, it's one that I don't like.
Okay.
But it's an area where I think there can be a lot of value unlocked by the rising share price. And I think that is if you are as an investor. I mean, Barrick would probably be better outside South Africa. Newmont bought Newcrest, and I think things haven't been looking good since then.
Okay, and there's a further question just on this whole commodity theme, and the viewer says, can all the commodities keep this up? In other words, would Sibanye, Impala and Sasol, because we haven't mentioned them yet, continue to run? So we're like sticking with you, because they all have slightly competing drivers, and it's quite interesting that everything, it feels like everything is running in a way at the same time, and that's also a bit weird.
Yeah. No, I think it's natural that the commodity prices are running, and this is not a function of great management or execution, a great execution. I just think that the commodity prices are driving the share prices. But I would be cautious about Sibanye. I think they've overextended themselves in terms of new projects, and those projects are sucking cash flow out of them, and they'll struggle to actually do well unless the prices remain at these elevated levels. But in terms of the other areas of the market, I'll probably still be favorable in the PGM space. Implants probably they could continue running. They've gone down quite significantly.
And Rowan, what about Sasol? Is this like a little bit of a brief fillip that clouds or maybe distracts from the greater issues that Sasol has to grapple with, which are pretty existential, actually?
So yeah, this price, and I guess you have to take the oil price into account as well. I think the risk reward is much better balanced. So they have, as you're pointing out, a number of challenges they need to address. But I think the sort of risks around those challenges have now been discounted in the share price. And you do have some level of operational leverage. It is not only the oil price that is perked up, which obviously is a key driver, but some of the spreads, the crack spreads have also improved, and also chemical pricing has actually improved, particularly sort of in the household goods that they are a key sort of supplier to. So that is boding well for earnings, I guess, going forward. And it's the earnings actually look very good at these levels. The cash flow earnings, I guess, less good, but it's still on a reasonable cash flow multiple. So I think it is looking valuable here. Again, it depends on your view on the oil price. It has moved up quite significantly. And those geopolitical tensions in the Middle East don't look like they're going away anytime soon. Although there was sort of, some talk of a sort of a détente even today. So you have to watch that very closely. But yeah, it's. I think the sell-off was a bit overdone at these levels, and it's reflecting that in the share price reflation.
Zwelakhe, would you buy Sasol, or do you have a different take?
Yeah, Juliette, I was going to say that I agree with what Rowan's saying, on the fundamentals. But I think particularly today what we saw was that the Minister of Energy and Environmental Affairs basically allowing them to use load-based emissions measurement. I think that gives them some breathing space, because they had spoken about potentially closing Secunda if they were supposed to remain on the source base. So it is positive for them. It gives them some respite. But then the commodity prices are favorable, as Rowan said.
Although, because I do wonder how much the oil price how much of a factor that is still in Sasol's basket of earnings. It's especially seeing as a lot of it is hedged, and Rowan, you talked about the chemical prices, and they were very downbeat on what's going to happen to the chemicals market. So maybe they were just being maximally pessimistic, and then there's a nice surprise when things turn out a bit better than you expect. But how important is a higher oil price for Sasol, or is it fairly marginal actually?
Yeah. So basically, the chemical prices actually derive a lot of their value from the underlying oil price. So what we are seeing is that there was a big glut in the market that was coming from a chemicals complex, and there is some tightness that is coming through in the chemical space. That is what has opened up their margins. So there was a bit of a surprise on the upside, so to speak. And then on the oil price, I don't think one would have expected that the oil price could have moved this quickly to these levels. So I think both sides have been a positive surprise for them.
Rowan, do you want a last comment there before I move on?
Yeah, so as like I said, the oil price drives chemical prices because it's a key input. So as the input costs go up, so that their pricing power on the chemicals is firmer, and they can increase chemicals prices as well. It does seem that the chemical price was being undermined by cheap Russian oil that was getting into Chinese feedstock, and they had a competitive price advantage there, but that may be coming to an end. So that was one of the other reasons that the chemical prices were depressed. But that seems to be rebalancing. So these are all, as we were pointing out, positive for the Sasol story.
Yeah. Okay. Moving on to another sector of the market entirely, and there's a question on Old Mutual. When the viewer asks why its share price has been going down after fair to good results. Rowan, sticking with you, what do you think's the foot there?
Yeah, certainly the price action post-results has been pretty disappointing. It does look like they are delivering. Maybe there's a little bit of uncertainty about sort of their foray into banking, but it certainly makes sense in their sort of broader financial services offering. We think it's more related to a general sort of concern around sentiment towards financial stocks. You've seen the banks come off quite a bit post-results, some of the other life insurers as well, Sanlam in particular. And I think it's really foreign investors concerned about the outcome of the election, and those bond-sensitive sectors like banks and life insurers are reflecting sort of an increased discount rate and increased risk. So I think they're going to remain depressed and better for sale until we see the outcome of the elections, which is drawing closer, but is still quite uncertain in terms of exactly what kind of government we're going to get in June.
Yeah, a very big, grand, messy one. Zwelakhe, would you similarly ascribe the weakness in Old Mutual share price post what seemed like quite good results to all this uncertainty?
I would agree with Rowan, but I think in addition, I mean, the challenge with Old Mutual is that they seem to have lost their insurance strategy. I mean, it's not very clear what does Old Mutual stand for, which customer are they targeting anymore. So the results were better than expected probably in the last round, but I certainly think that the clarity on the strategy, the bad publicity and all those things are actually affecting their new business growth. So the banking side is gonna take a while to shape up. So I do think it is a business that probably I'd rather be in Sanlam than Old Mutual.
Yeah. Okay. And I suppose the other perplexing thing is that you could say that markets are forward looking, so maybe the Old Mutual share price actually reflected what was delivered in terms of the results, but it hasn't really been a particularly strong performer, unlike the Sanlam. I mean, if you stack the two against each other, it comes off very decidedly second best, sadly.
Yeah, look, I think at the current price, I mean, if you have to go back many years and see where it was. I mean, it hasn't moved. It's lost a lot of value, but it's all about execution. I think there are issues operationally or in the country, but there are also operational issues that they need to sort out, that they need to come out clear to the market to say, what do they stand for?
Rowan, just on this topic, we were talking about insurance companies last week, and short-term insurers were advanced as quite a good investment. But in the light of what's been happening in the Western Cape, do you think there's going to be a bit of a knock to the Santums of this world? I suppose Old Mutual has a short-term insurance business, but it's within the company. You've got Outsurance. Do you expect a bit of pain there in those companies?
Yeah, it does appear that these extreme weather events, I guess, are becoming more commonplace. So they're happening with greater regularity. We are seeing that, for example, in Outsurance in Australia. UI, it was doing really well, then had massive hailstorms and big claims in December. So it is something I think the insurers, though, are aware of and understand, and obviously they manage their risk accordingly. But what you could see is the sort of risk earnings becoming more volatile. and not as steady in terms of the underwriting margin, sort of say sometime in a 3 to 6% target range. They haven't been in that range for a little while now. So it does point to sort of inherent risk. But I think they're very good at managing risk. So I think they will manage it and still be profitable, but maybe the earnings will be increase in volatility along with the volatile weather.
Zwelakhe, does that turn you off short-term insurers as an asset?
No, I do think that I mean, in the long term, they are able to price for these things. They can. The risk is increasing, but actually, the people who bear that risk are the people who are insured. You know, ultimately the insurers are going to transfer the risk back to them. The short term is that they pay through margins, they're paying, but in the long term they bring it back. They bring back margins through pricing.
Yes, which is bad news for for us all, unfortunately. Okay, well, talking about weather, there's a question on Lighthouse Capital, which has got nothing to do with weather, but actually property. And the question is it a good long-term buy to add to a portfolio? The share price looks to be stable. Twice a year there are dividends or a scrip dividend option. The scrip dividend option seems attractive to me if the counter is kept long-term. What do you think? So, Zwelakhe, sticking with you. Lighthouse Capital used to be Green Bay Properties, so part of the resilient stable of properties.
Yeah. Look, I haven't looked at them recently, but their portfolio is split in direct property and some infrastructure assets. So those areas are actually decent to some extent, especially the infrastructure side. But I haven't looked at what the valuations look like lately.
Okay. Rowan, have you cast your eye over this one?
Yeah, I seem to recall they did purchase some retail assets in France. So I guess you're going to get diversification there as well, beyond South Africa and obviously into Europe. I think you would have to look at the portfolio quite closely. It's probably something of a rand hedge. So you'd have to take a view on the rand. We're mentioning the election outcome. I think if it's positive, the rand can quite strengthen a fair amount from here. So you'd have to bear that in mind as well. But it probably is a reasonable bet for the medium term. I think European assets are better than, say, US assets in terms of, say, commercial real estate.
And specifically to the question about a scrip dividend, if you believed in the prospects of a company, is that the option that you might prefer to take rather than a cash dividend? Rowan, just sticking with you.
Yeah, I think it allows sort of flexibility. Some investors, obviously, particularly property counters, they'll buy for yield. So they want the cash yield and they need that to fund various expenses. But if you're an investor that doesn't require the cash yield, then they give you a convenient way to reinvest your dividend through that scrip dividend and stay invested and buy up more units. Typically, they give you a slight sweetener when they do that. It's a 5% discount to the prevailing VWAP. And so it is an incentive. It helps them because it conserves cash in their business to obviously reinvest. So it is quite a convenient way just to remain invested and keep topping up your investment.
Zwelakhe, is it something that you would go for? Or, I mean, I suppose it also depends on your circumstances from year to year.
Yeah, but if you like the business, I mean, I think that if you're a long-term investor, you'll probably prefer the script, unless you need the cash. I mean, you're already in the stock and you like it. I would probably think script is better.
Okay. Interesting that no one has sent any questions on MultiChoice and Canal Plus. Zwelakhe, they came out with an announcement today that they've agreed to work together, which I suppose was inevitable. But it's quite interesting that the price at which MultiChoice closed today at 118 Rand is still some way off the 125 Rand a share that's being offered. Is that just the time value of money, and also potentially that the Competition Commission in South Africa could put the kibosh on everything?
Yeah, I think the big hurdle, from our perspective, I think the big hurdle is going to be ownership of media assets by a foreign operator. So I'm not sure how they're going to cross that bridge, but I think the discount might be reflecting some of that skepticism to say, how do you cross it? But we don't know. Maybe there could be a partnership that they could do with a local and basically end up with a economic interest, but not a controlling interest in a sense of shareholding.
Rowan, what do you make of it? And also, actually, we just had the chart up on screen there. So it shows a very neat year of a deep V shape, and basically multi-choice is back where it was this time in 2023. So before you get overly excited and think, oh, well, I'm getting such a generous offer here, I suppose Canal Plus was just quite opportunistic maybe at swooping in at the start of the year because the price was so depressed. Still, do you think it's going to go ahead?
Look, it does. I think it does look like it's going to go ahead. What is quite interesting is Canal Plus indicated in the announcement that they were prepared and have been actually increasing their shareholding beyond the 35% threshold, 36.3%. It would appear based on the price action today and the volumes today that they were active in the market again. Over R1 billion worth of stock was traded at what, from our perspective, was a fairly high price, given, as you pointed out, the time value of money. It is quite a complex transaction. We've seen where there's a foreign buyer of a large South African listed assets. The competition authorities, the other regulatory authorities can take over a year to ponder or approve the transaction. So if you're only going to get your money in a year's time, there's a significant holding cost. They indicated there's not going to be any further compensation to shareholders for the time delay in the form of dividends or any interest like that. So it does appear that they are buying up shares. I think they're pretty confident they have a structure for the foreign media ownership rules. And it's something that sounds like what Zwelakhe is saying is correct, that they'll probably cut in a local for some of the voting assets or the voting rights for the local operations. I think they're quite interested in the African operations as well. Canal Plus is looking at listing separately out of Vivendi, and I think they see multi-choice as a key part of that listing strategy. So they're very committed. I think they're the only buyer. And so we're probably going to see a lot of volume going around at these levels.
Okay.
There is a lot at stake because it appears that if for whatever reason the deal doesn't go ahead, the TRP may require Canal Plus to sell back down to 35%. So that is one key risk that you need to consider. If it doesn't go ahead, there would be a significant overhang of the stock.
Okay.
But I think it's going to trade around these levels for quite some time.
Take your money and run. If Ibrahim Patel and his merry men at the Competition Commission are anything to go by, I would suggest. Okay, getting to your stock picks this evening, and in the context of a market that's quite tricky at the moment, I was looking at an FT story saying that the 10 largest shares in the world, and most of them, I think all of them American, now make up almost 20% of the MSCI All World Country Index, which is staggering market concentration. So, Zwelakhe, are you looking for shares within that small gathering or outside? Where would you venture for your stock picks?
I certainly think that the opportunities are outside that gathering. I think there are some great quality companies there, but I think valuations have run hard. You probably want to look at the lower tier of stocks. There are a lot more opportunities in that area.
Okay, so what's your stock pick this evening?
Oh, you caught me off guard.
Sorry.
So I'll go with Britvic. I'll go with Britvic. So it's a UK-based beverages business with a 100-year heritage, and it is a business that has shown in the last quarter they had quite a decent set of numbers. I mean, they have been losing some volume, but they've maintained revenue market share, and they've been able to price for their volume. So they are growing well in Brazil and France. So certainly it's a business that is trading at a decent multiple compared to many peers. And it is a great value creator, good cash flow generator as well.
Okay, so Britvic for you, Zwelakhe. Rowan, how about you?
We're staying local. We're going with Life Healthcare. They recently went ex a special dividend, the R6 dividend that was a result of their imaging asset sale in the UK. So now you've got largely a pure play South African healthcare group. the multiples of all of the remaining listed healthcare groups have come down. It is quite a tight operating environment. We're seeing the margins improve. They've got quite a few network deals. I think they can start to push through more efficiencies and improve their margins. So the multiple's low here at around 10 times. And they do have a bit of an X factor, this Neurosec imaging business, which may help early detection of Alzheimer's. That is making good progress, and that does have a lot of potential. So I think you're getting the core business sort of at a reasonable multiple with some optionality for this initiative, and it could make quite a big difference if it goes ahead.
Okay, let's hope so. Gents, thanks very much for your insights this evening. Always a pleasure to chat to you both. As Zwelakhe Mnguni is from Benguela Global Fund Managers and Rowan Williams is from Nitrogen Fund Managers. Up next, The Close. Stay with us.